ADB platform. I just really appreciate what you guys are doing and just bringing out, the new evolution of Web3. You guys are also highly engaged in NFTs, which really is a lot of the future of especially the metaverse, and a lot of where this crypto space is going. So I just want to thank you for that. And so just a bit about me first. So as Andrew said, been involved in banking for a number of years and been trading for the last 20 or so years. Initially, my focus was on fiat currencies. So for a number of years, trading fiat currencies, moved into different investments, and just got a really good grip on how the market worked, and ultimately ended up managing funds. And so I was managing funds primarily with fiat currency. And when I worked with the banks, one of the red pills I had to swallow was why the banks existed, and where does money come from? What is the purpose of the banks? And so I really had I guess you could say, an awakening as to why they existed and what they did. And although we end up really needing the banks, there was definitely incredible usurpation of control. And I realized that a lot of the money was actually created, all money is created as debt. And because of that, it actually brings people into slavery. Now, I don't disagree with it. I think it's great. I want more of it. But I realized it was definitely used in a centralized way to control people. So I really struggled with that for a long time and tried to understand, well, how do I be in the system and use the system, because we've come to rely on these institutions. In one sense, they are quite important, but how do I come to a place where I can use them and they're not using me? So that was a big question for me, really sort of my aha moment in centralized control, and what do I do about it? So I actually ended up moving away from the banks and started managing funds myself, just with private clients. So I live in New Zealand, by the way, which is on the other side of the world. So it's early in the morning here. It's a beautiful day, but I wanted to move away from that centralized control and wanted to find ways of what more freedom would look like. So ended up looking after my own money, looking after other people's money in a much more decentralized way. Now, what happened for me was about 2016, I entered the crypto space. And I'd heard about it for a number of years. I was invited to buy Bitcoin back in 2011, which I woefully regret. It was one of the biggest mistakes of my life, but it was simply because I didn't understand the space at the time. So coming into crypto, my initial introduction was really privacy coins. And, the main coins that obviously stood out in the space were Ethereum and Bitcoin. However, I was introduced to a few other coins which are quite different and ran against the mill. And so initially just started trading for myself. So obviously background in finance and banking. I understood this as a brand new space, but not only as a brand new space, it was a brand new asset class. And so I think there's only typically been a number of asset classes. There's been stocks and bonds, there's been cash, there's been real estate, there's been commodities. And so now I very, very clearly saw with the introduction of crypto, we have the first new asset class in 200 years. The previous asset class was bonds. So I realized, okay, in the next 5 to 10 years, every hedge fund, every institution, every pension, every super fund in the world is going to have a minimum of 5% of their total allocated funds invested into the space. So if you look at the facts, it turns out to be in the trillions of dollars across the world that was going to be flowing to the space. So I just saw this huge flow of money coming into crypto and realized that this asset class is really in its infancy. And from a financial perspective, if you look at any new asset class, if you look at any new technology to invest in, there's always a very, very clear phase that asset or network follows. And it starts with, a very, very sort of flat pattern where we have the initial innovators, the inventors of their technology or their asset. And then you have the institutional money slowly starting to come in and realize that this is an incredible opportunity for the future. And then you have a bit more interest, there's a bit more adoption, and then the curve really starts to steepen as we see sort of global adoption and mass adoption take place. And when I really looked at crypto, I realized this is probably the opportunity of 2 lifetimes, simply because this is an asset class that's brand new and it's in its infancy. And so I started to heavily invest in crypto. Initially, I was just, as a trader, I was actually just exchange trading. So I was buying without leverage and I was building a large portfolio. And so as I watched crypto evolve, it was very, very clear that there was obviously a huge generational gap. Not for everyone, but for many people in my acquaintance, there was definitely a difference in how a previous generation saw this new technology and also the inability to understand it and actually navigate it. So I was trading for different people and actually custodying funds for them. And so people would come and say, look, we've heard about this new asset class. We don't understand how it works, but we want to be involved. Can you please buy something for us? Can you invest for us? Because we don't understand wallets. We don't understand passwords. We don't understand exchanges. It's a totally different world. So it was how I started to manage or custody crypto for clients, because there was an inability to understand how this world actually worked and the mechanics behind it. And in fact, I remember one day, one of my family members who was much older than me came to me and said, Michael, I've got this Nano S to hold my crypto on, but I'm scared I'm going to lose the password and all my money. Can you please take it for me and look after it for me? So at that point, I really realized that there was a deep generational misunderstanding in this technology. And I understood there was definitely a need for simplicity to be brought into the space and for people to understand how it worked so that they could take advantage of this opportunity. Again, I believe it's the greatest wealth transfer in the history of the world and the greatest financial opportunity of at least 2 lifetimes. So I wanted to see simplification, and that obviously comes through education and understanding. But I was also concerned with where this was going, because something that has such incredible opportunity is never overlooked by larger players. And now, especially in trading, as a trader, we understand that the bigger players control the markets. For example, I think it's 5 banks control 80% of the entire volume of the Forex market. 5 banks. So all of the players actually have all of the capital to actually move these markets however they like for their own benefit. And there's a number of smaller players who are in the game as well. So definitely seeing that there was a shift in people recognizing the value of this space, and there would be a lot of smart people who would be wanting to access this amount of wealth that people were trying to protect. And so what happened in the trading space was we had a couple of major hacks. So we had the Mt. Gox incident where there was a number of a lot of crypto was stolen. The exchange was hacked by people who saw the wealth and saw an opportunity to take it. So that was not a governmental or an institutional play. It was simply from people with the hacking power to access that system and take all of that wealth. But for someone who's a trader, so I'm in this game every day. I then moved on from exchange trading to margin trading, which is what I did with fiat currencies already. And so obviously when you trade with margin, you're trading with leverage that you borrow from the broker, and that allows you to get much bigger gains on your trading rather than trading just in the spot market without leverage. So as a trader, our number one characteristic is really a risk manager. Our number one goal is to protect our investment and to protect our capital, and that should be the number one goal of any investor or any trader. So coming into the crypto market, I realized that, okay, if these other exchanges have been hacked because there's so much wealth stored up in those spaces, how much more should I not only be protecting my own crypto, but how much more should I be protecting the capital of my investors that I'm custodying for them? So then I realized that there's a couple of options. I can store my crypto on the exchange with risk, or I can store it in a soft wallet with risk, or I can store it in a cold wallet and keep it in the blockchain, way out of the way. This is where we buy and sell cryptocurrency, either without leverage or with leverage. And if you keep it in this exchange, there's a tremendous amount of risk, because now the governments have been filing lawsuits against certain exchanges. And also these exchanges can be hacked. So every major exchange that I know of has been hacked. Bitstamp's been hacked, Coinbase, Binance. A whole lot of them have had hackers come in and take people's funds out. So when I initiate or enter the market on one of these exchanges, I always do it with a small amount of currency, but the larger amount of funds that I'm using for investing and trading is held offline. So this blue box here represents the online community on the internet. And I'm sure, as many of you would know, the blockchain is made up of a number of different nodes, thousands and thousands of nodes on different computers around the world. So although it is, in one sense, connected to the internet, it's sort of like the cloud. It's outside, it's disconnected in one sense, very, very simplistically, from the online community. So the way that I trade to protect my capital, to protect the capital of my clients, is anytime I want to initiate a buy or sell on the exchange, I basically get funds from the blockchain, wherever those funds are stored, bring them onto the exchange. And then I also have access to these soft wallets. So for example, I have Exodus wallet over here. I have an Atomic wallet. And so I can basically transfer funds to and from the exchange with my soft wallet. But these soft wallets are also centralized. So they've been created by companies with the purpose of getting fees from customers, etc. So they are also at the risk of being hacked. However, if I use them, it will simply be to just to exchange different currencies briefly, or to transfer funds across just for a moment in time. But I do not keep ever a large portion of my funds in these soft wallets, because they are still very, very susceptible to either the government closing them down, or they're susceptible to hacking themselves, or they're basically a centralized system. So the main way that I protect my funds is offline using cold wallets. And for me, one of my main ways is using the Nano S with Ledger. And so over here, I've got this circle here just to represent the gateway. Ledger is basically a gateway which you can access the blockchain where your funds are stored. So you have a small token which gives you a password, and you can use that password to bring your funds off the exchange through the gateway and back into the blockchain. So very, very simplistic form, but that's how I control my funds when I'm trading, when I'm buying or selling cryptocurrency. So very, very simple, but what I've discovered is that if that's not the case, I will still be susceptible for trading, to hacking, sorry. And one of the things that has probably become a lot more prevalent in my mind these days is that with the introduction of staking in the decentralized financial system, is that there is now a lot of competition. Okay, so basically with these legacy systems, obviously with the staking rewards, in the past there's been sort of maybe 5% or 0.5% being made from the capital markets and from the banks. However, now with staking, there's a number of exchanges that are offering 5, 6, 7, 8%, or even a lot more to stake your cryptocurrency. So there's an incredible amount of competition, and therefore it's in the interest of these legacy systems to actually close down the decentralized financial space, because they're not making the same money that they used to in the past. So I realized that's why you're getting these certain lawsuits against, I think it was it Coinbase, or they had a certain program come out where you could take out loans for much cheaper than you could take it from the banks for. So it represented a barrier to the banks, and therefore there's a huge desire to bring centralized control to that. So even though I want to stake my cryptocurrency, at the moment I'm extremely cautious, because I realize it's not difficult for the government to close down one of the exchanges where that staking program is taking place and freeze my money. So although I have a desire to stake, I'm extremely cautious about how I would do that. And I would obviously never do that with all of my funds. It would only be a small portion of my funds. So basically, the way that I protect my funds as a trader is that I have access to soft wallets where I can transfer my funds to and fro from the exchange to initiate buys and sells. And I also have a Nano S, or a cold wallet, which is outside of that system, which is unhackable. So no one can touch that. I'm the only one with a password to that. Also have a Decent cold wallet, which is identical. It's outside. No one can touch it. I'm the only one with access to that. So going forward, for anyone who's interested in being involved in this space as a trader or investor, I believe it's absolutely of vital importance that people understand how cold wallets work, so that if they're wanting to initiate personal investments in the crypto space, it is done with this understanding, and it's keeping it totally separate to any sense of control. Now, going forward, something that is also of incredible interest to me is that with blockchain, you have a number of ledgers that are linked together. And at the moment, the Bank for International Settlements, which is the central bank of central banks, it's the largest bank in the world that you've probably never heard of. They are wanting to initiate something of a universal central bank digital currency. Now, we know at present almost every government in the world is working on the creation of central bank digital currencies. And they've primarily talked about them in the sense of being used within the governmental space. So used for exports and imports and government payments. Now, that could be something that could be helpful initially and beneficial for the country. However, the BIS has actually talked about using them in time to come as programmable money, where the central bank will actually choose how much of that money is allocated to you and how much money you're actually allowed to spend. So even though, cryptocurrency has provided this incredible level playing field for a number of people to enter the investment space without being an accredited investor. So in the past, you need, $1 million net worth in many spaces to actually work and invest in certain ways. Crypto has changed that. You don't need a lot of money to make money. You can become a millionaire with $1,000 if you buy, the right investment. So there's this incredible level playing field where the middle and lower class can now rise very, very quickly to the upper echelons of wealth in the world. But if those lower cultures can rise higher in the wealth system, then they no longer become slaves. They no longer become reliable or dependent on legacy systems. They no longer just become worker bees. They are increasing their place in society. But unfortunately, it makes sense for people to stay as slaves, to stay as workers, and keep feeding the system. So the decentralized era that we've come into represents an incredible opportunity for the entire world. It has an incredible opportunity to lift people out of poverty and to level the playing field, where people who normally don't have access to wealth creation now have that access. But at the same time, legacy systems see, hang on, we need to make sure that we keep control on this, because we don't want people to get too much power or too much wealth. And in fact, the current leader of the Bank for International Settlement said, in due time, with a central bank digital currency, which every citizen in the world will be linked into, central banks will have total control over tracking all digital coinage and the technology to enforce it. So even though initially it looks like they are wanting to create CBDCs to facilitate government payments, not only within the government, but into government as well, it looks like in time, they're wanting to bring every citizen actually under central bank digital currencies so they can track everyone's money. So to me, that's an incredible, affront to my freedom, because I believe one of my key core values is freedom. Not only freedom in myself, but freedom to choose what I want and not be under the auspices or authority of anyone else to actually control what I do with my life. So in the future, I see a risk there. However, I still do see the opportunity for the access and participation in the financial industry through peer-to-peer payments. So even if on-ramps and off-ramps such as exchanges will be shut down, for example, if people are wanting to follow a certain cause or have a certain value, if those certain subcultures are restricted and limited by government overreach, there is still the ability to transfer money. So obviously you can pay directly from wallet to wallet, so peer-to-peer transactions. So if I have, as a trader, if I have money in the blockchain, if I have your wallet address, I can simply send that straight to you and no one else knows who that is, and it can't be touched. And also you have companies like Signal are now bringing out a new anonymous payment system. You also have privacy coins like Monero and Zcash, where the identities of the people are totally anonymous. So these are things that are still around. These are things that still represent incredible opportunity, because obviously with the central bank digital currencies, what they're wanting to do is also link that to your identity. And for me, one of the most important things in my life is understanding my identity and not allowing anyone to control that identity, because that belongs to me. So obviously with the introduction of the metaverse, there's a number of identity issues around that. Even though it's an incredible space where there's incredible growth as far as culture is concerned, there's a lot of trading going on in the metaverse space. There's an incredible amount of value that is being created there. I'm definitely making sure that my identity is secure in the online space and my finances are secure. And so the way that I do that is obviously I'm never having all of my money accessible at any one time to the system, even though it's quote decentralized. Most of it will be stored offline. However, when I do need to participate in this space, it's very, very easy to come in through the gateway, participate, and then leave. That is the way that I secure my money. And these are the ways that I'm learning to protect my own identity, my own data, and my own privacy in this space. So that's all I wanted to share today from the financial perspective. So where would you like to go from here, Andrew? Yeah, would anyone have any questions? I actually, I believe that staking is an incredible opportunity. And I do have assets staked. I'm earning some incredible rewards. However, I'm always sure that I don't have large portions of my capital or my trading account or my investments in staking. So I only have a portion of it. And that's simply for the fact that, some of these exchanges still can be affected by the government. So, for example, if there is such a huge threat to the legacy banking systems because of the rewards and the yield that has been provided on crypto assets, that I would not put it past the legacy systems to actually shut these down until they can get some sort of even take some of the crypto customers back into the legacy systems, because no one wants to be a part of those systems anymore, because the yield is actually it's incomparable to what's being provided through staking. So yes, I think that staking is a great opportunity, but I would always caution as to what percentage of your assets or your total investment portfolio or your total trading account is being staked. Simply because if you had 100% of your investments or 100% of one particular asset being staked on a protocol, then if that was frozen by the government, by the SEC, then you might be sitting on dead money for a long time. It might be frozen for who knows how long. And obviously, some of these exchanges have been hacked before. So there are some great staking platforms like Nexo, but there's still there's been a lot of government talk about some of these platforms and exchanges, and it's not all positive talk. So there is a possibility they could be shut down. So I guess the short story is I stake some of my money. I'm getting rewards, but it is less than 15%, probably 15% of my total investment portfolio.
Yeah, my name is Perry Kundert. I'm been in the programming field for more years than I'd probably care to share. And it turns out that I've been in the crypto field now since way before Bitcoin. But like Michael, who, by the way, that was a great presentation, Michael. I agreed with everything you said. Like Michael, I was there at the birth of Bitcoin back there in 2009 and chose not to run the miner for various reasons. But yeah, my background is in complex systems, distributed systems, industrial control. And, 25 years ago, we were having issues in the industrial control field where we had massive amounts of distributed equipment that all had to communicate with each other and organize very complex distributed computations, but where parts of it could fail. And obviously, if you're trying to run a plant, or in the case that we were working on oil platforms out in the ocean, failure of that software meant that that thing would tip over and sink into the ocean. So it just wasn't acceptable. And so I was looking for decades for solutions to these problems that were reliable when, Satoshi, whoever that is, invented Bitcoin. And we finally had a way to reliably organize distributed behavior in a way that was Byzantine fault tolerant. That means that parts of that system could be actively hostile or fail, and yet the overall system continued to work. It was a huge breakthrough. And so, as cryptocurrencies developed, like Michael, I knew that this was going to be a huge field, but over the years, it's become clear, and I think everyone on this call would agree, if you've ever tried to help somebody set up a cryptocurrency wallet or a cryptocurrency account, it's frightening for people, because this is a world where you have total control over your assets, but that also means that one screw up by you means that your assets are gone. Like if you lose that BIP39 mnemonic phrase, the 12 or 24 words, your money's just gone. There's no password recovery mechanism. If you have a wallet that you forget the password to, and I'm helping somebody try to recover 10 Bitcoin right now, even as we speak, that's about $800,000 Canadian. That's just gone because the password is gone. These kind of things are terrifying to people. And so what I want to talk about, and I'll take a breath here in a second, is how do you help a normal person to achieve both security, meaning that it's very hard for random people to steal your money, and reliability, meaning that it's very hard for you to fail to be able to access your money when you need it. Or your heirs, for example. If you pass away, how is your children or family going to get access to these wallets reliably if you've only got one passphrase stuck in some place that they don't know about? So anyways, that's what I'm going to talk about. I'm going to try to keep it as simple and quick as possible. But I'll take a breath here. And does anybody have any questions that they would like to see addressed in this field while I cover this? No? All right, well, I'll just carry on. So what I discovered when I was trying to help people over the last years set up these wallets is that the BIP39 technology, which is the mnemonic phrase. The phrase, when you create a wallet on most systems, what you're actually doing is you're not creating a wallet directly. What you're creating is something called a seed. It's just a big random number, usually 128 or 256 bits, which means, for example, it would be like flipping a coin 256 times, writing a 1 down if it's a head or a 0 if it's a tail. And those 256 bits are your seed. What you're doing when you write down remembering that 108-bit number actually encoded in those words with a little bit of self-check error detection. And if you write down those words and you recover them later, you can get that seed back. Now, what you get from that seed is any number of wallets that you want. Usually people just generate one. You run a mathematical algorithm on that big number, and out pops a pair of numbers, a private and a public key that describe the public half is the address of that wallet. The private half is the way that you access that wallet, how you send money in and out of it. And as long as you have the original seed, you can always get those wallet numbers back. So you never have to worry about storing those wallets. You can type them into a software wallet, use them to interact with those funds on the blockchain, and then destroy that software wallet, erase it, and so you can't access it and nobody else can, but you can always get that wallet back later when you want to. So it basically lets you always gain access to your money. And if you can reliably pass that on to your children, they can get, your heirs can get access to that money in the case that you pass away. The problem is, it's almost impossible to reliably secure that phrase. You can make it very, very secure by storing it in exactly one place and then making sure that that vault is locked. But what if that vault is lost in a fire, right? You've got lots of security, but no reliability. You can't recover that. Or if your heirs don't know about it and you pass away, right now they estimate somewhere in excess of 20% of all Bitcoin is permanently lost. That means it can never come back. Those owners can never access it. And so what a lot of people have tried to do is split up that seed. Well, I'll store some here and some there, and then if I recover both of those places, I get my seed back. But if one of them is broken into, that half of the seed doesn't help you. Well, what has been invented is something, in fact, I'm just going to show it to you. I'm going to stop talking and I'm just going to show you how this works. I'm going to share my screen here. It's something called Slip 39. It's it's an algorithm that lets you create a bunch of passphrase, a bunch of mnemonics, and save them in various places with friends and family, for example. And I apologize, this looks like a piece of complex audio gear, but that's just the way that it is. I'll hopefully improve that over time. You can get access to this now, this application, and just right off the bat, it comes up with defaults that would let you literally print this, save this this software or this wallet, and use it. So I'm just going to give you an example rather than talking. I'm going to create a wallet to my desktop, and there it is. Can you all see that? I assume that you can. What this is all of these mnemonics here. You cut these cards out and you send them to various places. For example, the first and second one you might store at home and at work in vaults or or secure places. And then all these ones that say family, fam, you would send them out to your family. And if you can recover at least 2 of these 4 family cards, you can recover your that group. And with 2 groups, you can recover your seed. And these friends, the ones that are marked friends, you would send those out to friends. And if you can collect 3 of these ones that you've sent out to friends and 1 of the other groups, you can recover your seed. But the key thing is that any particular card is valueless. Like if somebody finds that card, if it was a BIP39 card, your money's gone. If it's one of these slip 39 cards, it gives them absolutely no access to your wallet. There is no theoretical way that it doesn't even improve their chances of finding your wallet if they have a computer and they try to brute force it. So with this technology, you get both superior security from BIP39, meaning that it's harder to actually accidentally lose your wallet or lose control of it. And you get superior reliability, meaning it's much, much more likely that you or your heirs will be able to recover this wallet. And anyways, that's basically how this works. There's a lot more to it. But I think that's all I'll go into right now. There's a lot more capability in the application too for pros. You can turn on a lot more functionality to help you do a lot more things. But I'll stop there and I'll just answer some questions. No. Well, I would recommend that you don't. You can just stick a USB stick into your computer, and you can save it temporarily to that USB stick and print it from there. But the intention is that, and in fact, you can run it on a Mac and just directly print it to a printer, so it never actually hits your hard drive. The intention is to print it, cut them out, pop them into envelopes, and send them away. And then, just recommend people save them with their life insurance policy and bring them to your funeral if something bad. To sort of summarize, if there's no more questions, with this kind of wallet technology, and using a hardware wallet, which is what I would recommend, this is a Trezor, I would recommend using a hardware wallet. You can enter these slip 39 phrases directly into the face of this wallet and recover your seed directly to this hardware wallet, and then use this exclusively when you're trying to transfer money around from your accounts, and even to do DeFi transactions. For example, to stake, say you wanted to stake some Ethereum or USDT or something like that and earn revenue, you can use DeFi staking platforms so that your tokens never leave your wallet in the blockchain. They never go to an exchange. The only risk of them getting hacked is if somebody steals this hardware wallet before you erase it, or they find all of your slip 39 or a bunch of your slip 39 cards independently and reconstruct your seed. Other than that, there's no risk of theft. But to agree with Michael about being very careful about staking, even staking cryptocurrency on a DeFi platform, it's actually quite extremely risky. For example, if you have a pair staked on these platforms, usually it's a pair of cryptocurrencies like Ethereum and USDT. If one of those cryptocurrency pairs fails, for example, USDT is found for whatever reason to be a fraud and it goes to zero, these DeFi platforms would inexorably suck all the wealth out of your Ethereum staking pair into that sinking ship, and your money would just be gone. And there literally would be no way for you to stop it. It would just circle the drain. You could watch it go down and it would just disappear. So just be very careful with staking, especially if there's any risk to any of those currency pairs. And I'll leave it at that. If anybody's got any questions, well, you can. There's links on my on that site that'll let you buy them. Make sure you buy them directly from Trezor.io. Don't buy a used one. Don't buy it online. If somebody has a coat full of Trezors, don't buy one from them. Only get it from the official link.
Thank you for having me. Man, the 2 previous speakers, y'all guys are awesome, man. I'm over here writing stuff down, notes, like 24/7 right now. My name is Joe DeGuerra. I got in. I'm in more like marketing, advertising. That's where I started. In this, I guess, this spectrum on the internet of things. Build lead gen, follow-ups, systems and stuff for client-based businesses and everything. And got into this stuff, crypto and everything. I'm a late guy. I'm a late bloomer over here. So it's actually just been here recently, and probably about year and a half maybe. And so what caught my interest was two things: was this NFT craze that everybody was talking about, and the whole thing about just a crypto coin. See, we all got backgrounds, of course. As for myself, I had a pretty rough childhood growing up, just whatever. Ended up doing some time and did a lot of time and did some hard time. And when I learned about, exactly what cryptocurrency, like Bitcoin and all this stuff was, it just kind of like the light went off. What I mean by that is because I'm looking here and like people are like, this is, even my own daughter, she's 15. She's like, I sent her some Bitcoin so she could start learning and stuff. And she was like, why are you sending me this make-believe money? And I just laughed, and going back to being incarcerated, when I was locked up, there was no dollar, there was no fiat, there was none of that shit there. So, we had to improvise. And you know what our currency was? It was stamps. Of course it was goods. If you come and trade me, I just stole all this chicken over here and the chicken's good and I'm hungry, I'll trade you, barter stuff, there's that. But the stamps were our currency. That's what it was. I had an incident that, I hustled in there. So, they're bringing me $100 bill and they're like, hey man, can I get some stuff for this $100 bill? And I'm like, what do you want me to do with that? We're in prison. If I get caught with that, I don't get more time. And he's like, no, you can get anything with this. All right, well, then you go buy something with that because I'm not taking that. But you can come back and bring $100 worth of stamps and you got a deal. So that's where it clicked for me. And the reason why I say this is because I'm in the cannabis industry as well. And this is where it all kind of made a connection for me, especially with NFTs. Because then when I realized what an NFT was, I was just like, what? That's all this is? Like, it's literally randomly generated images. Like, let's just say, if I can take over the screen, show. Like, it's pretty simple. I was like, what the heck? This is all this is? It's just different layers, right, of an image. So, like, I was like, okay, so you got the head of an image, which we can, if I can find what I want to use as an example here. You have the head, of course, just really simple. And then you have, we have these eyes. I was like, all right, there's the original eyes, and then what? I just make 5 more eyes? Different. So when I learned that it was all layers, I was all like, wait, okay, so there's only 2 of these eyeballs in this whole 10,000 collection? And they're like, yeah. And then I can say, all right, the guys who have those 2 eyeballs, y'all each get a pound of weed for free. Just come to my dispensary. And they're like, yeah, pretty much. And I was like, whoa. It was like, boom. I was like, seriously. I was like, so that's where it really hit me. And then when I learned about the currency stuff, and I was like, wait, hold on. Because, everybody talks about NFTs and crypto and all stuff, and you hear it all the time, community, community, community. And people get tired of that shit, but it's fucking true. Because where I was at in prison, that was that community. It was a village in there. And we even had it to the point to where like, oh, the good stamps are the forever stamps. Oh, you got 39-cent stamps? I'll take 5 of those to equal a dollar because, when it was worth 39 cents, yeah, it was only 2 of those. So like, that's all this was to me. I was like, whoa, hold on. The cannabis culture is a very huge community. I'm talking about cannabis culture, man. It could be anything from the person that uses the scented candles that's made out of hemp to the person that's like me and, smokes dank every day. And that right there, I was like, wow, why not have, you know, a currency for this culture, for this community, that we can literally take it anywhere and there's no more of those red tapes and stuff. So like, that's where I was like, wow, that's cool. Then there's the other side of it, what Michael was saying. And I was like, dang, because I realized that too. Like, man, this is kind of scary because now we're putting everything on the blockchain and then this decentralized, you know, centralized coin type stuff. And then what after Michael said, like, it makes total sense. Like, you know, then it's going to be like off your identity off of that. Like, whoa. Which I was so glad that he broke it down like that simple to where like, that's how you get in and get out. So the NFT, I love it because, you know, like when I first started trying to see what all this was about, like, man, I was getting told 10 grand, 15 grand for all this stuff. And I was like, dang, I ain't got no 10 grand. I don't got no 15 grand to pay you to do this, but I have a great idea. So I was like, you know what? I'm going to go figure this shit out. And I'm no coder, you know, I don't know anything about that stuff, but you know, it's just, you know, I was being resilient, kept going. And now I literally figured out how to freaking make NFTs for like free. And it's like, wow, dude, this is the stuff, this is the opportunity that I like. And this is the one aspect that I like about all this stuff. Because it's like, get in and get the fuck out. Because we know what's coming. You know what I mean? Michael just explained it. And then what Perry's saying, that's where it was a big concern too. Because I'm like, all right, if I got to build this, if I'm building this legacy for my family, how am I going to leave this? And that's why I was like, oh man, that was just a great answer right there. But like, I love this because it's offering freedom, but then it's like, what are we doing? Are we trapping our own selves? So it's like, all right, there's always a way out of things. Even when I was in prison, I knew how to get from one side of the compound to the other side of the compound without getting caught and with contraband. So we're just gonna have to figure this stuff out and then have a great community that knows this stuff. That's just all I got to say about this, guys. I love NFTs. If y'all want to know anything about NFTs, we have a group called Crypto Kingdom on Facebook. We have a messenger group, and we're always inviting people, whoever wants to learn. We have a lot of OGs in that group too, and they know their stuff, including like Marcus himself. Like, you know, he's even brought some stuff up where we were going to go one way because his expertise, it showed me something. I was like, yeah, all right, we're not going that way. And so there's that, you know what I mean? And if y'all want to come, you're more than invited. I'll drop the link in the chat and stuff, wherever. And let's play, man, because you know what? This is the Wild Wild West. You know what? I live in Fort Worth, Texas, where the Wild Wild West started. So it's gonna be fun. So that's all I got to say. Yes, I'm sorry, I was taking a drink of water. Yes, thank you. Heck yeah. No problem. So like the layers, like just for example, just like, you know, just to keep it simple, you can have a background, that's a layer. You have a hat, that is a layer. You have the eyeballs, that's a layer. And this head is a layer, right? So now, check this out. What you're doing is coming over here, and this is what's so funny about this. Everybody asks me, you know, about NFTs because, you know, started the group and all these other things. They're thinking like I'm just buying all these NFTs. I'm just learning because I want to create, right? And the first NFT I finally buy ends up being some little elf, a little elf with a scar. You know, I have some ex-con and stuff over here, and I'm buying an elf, but it's amazing. But this is a great place to generate random generated, you know, stuff, but I'm on the wrong wallet. So what you're doing is you have those layers like I showed you, right? And then it's gonna be put into a file. So what the file is gonna look like when we actually get over here, we're gonna come over here. Oh no, it's faster. Can you just made the data real fast? So like you see how this looks right here as far as like layers. This is what I mean by the layers. So if you're drawing like whatever drawing you have, like, so what you're gonna do is you'll draw the body first. Say for instance, I don't know what type of artist you are, but like just take it, you know, you're drawing a character. So you'll have the body first, right? And then, you know, that character may have a shirt, but then you can have different characters, but they all may be the same body. You get what I'm saying? They all have similar features, like you see like in the apes and stuff, but what's different is maybe the eyes. So if you're like an actual artist, that's awesome, because then when you're drawing, you're literally like, you can draw 10 different eyeballs to go with that one face and that one body. And then those 10 different eyeballs are different variables for one layer. Hope that makes sense. And then, so let me show you. So these are all, I have 10, 10, 10, 10, 13. So there's 10 different variables of this joint right here. And this is a layer. It's the same joint. It just, the only thing that's different is the color of the smoke is different. The eyes, same thing, hat, all that, right? So when you come in here, this is where how simple it is. Like you're allocating everything. So this is the actual bull joint right here. There's 10 layers of it. Here's all the layers right there. So now I'm all like, all right, and let me see if I can find the actual so you can see what I mean. Let's see if we can find one. We can find one with the joint real quick. Oh, there's no joints. But okay, so anyways, they each got the color. We can even go ahead and generate it so you can just see what happens. So for instance, like, so what I'm telling our clients is like, all right, dude, this is how it's looking. You know, the two variable, we're gonna have 5 of those. So what do you want to do with that? Oh, okay, well then 5 of those, they can just come to our dispensary and we'll give them a bag, and they got like 4 minutes and 20 seconds to fill it up, because it's not that much to them. But then you got these guys that have 120. I go, well, what would you do with them? It's like, all right, well, we'll just give those guys, those holders, 20%. Now, I'm saying this because when you as an artist, 'cause, you know, you're looking on the artist aspect, what gives these things a lot of value is utility. So like, even if it is here, this is the drawing that's the NFT and stuff, but what do I get with it? Now, if you're just an awesome drawer, you know, because, you know, values the perception of the beholder, right? And that's awesome, cool. And if you have your community, that's where you build your community, build your machine, so that people that have that same perception as you, they're going to see the same value. You know what I mean? Now, this part is where you can start breaking down some utility. Because then, you know, you have your community, you be like, all right, for you, for instance, an artist, you know, what if you have people that follow you and then they love your art, and they may just want to have a session with you in our original piece just for them or something like that. Well, you know what? I'll do that for 5 of them. And that's why you have the layers. So when you're coming over here, when you're finally just coming in, finally generating, that's when you start creating these batches, and that's why it looks all like this. That's why you say, you know, this is a simple version, but like, you get what I'm saying? See how this background is different? There's a different hat. There's an orange smoke.
Thanks, Joe. That was amazing. Appreciate that. Well, there's a lot of people wanting to learn how to access this, and like with Joe, is NFTs for other people that might be trading. So I'd like to say the same thing. If people don't know how to real clear idea how to identify trends and crypto value, then I'll put a link in the box so you can connect with us Academy. We have very comprehensive in the field. So I'll put a link in the description, and any questions, feel free.